Hi guys, today I'm going to show you a very simple way of drawing support and resistance on an intraday chart. I'm not going to show you any other indicators along with this because I want you to concentrate just on making these support and resistance line on your chart for intraday. Okay, for this what we would require would be a 5-minute time frame candlestick chart and the volume indicator as you can see on this chart. So what we would do is that we would need to see or rather look for two consecutive bullish bars and two consecutive bearish bars. So when I say two consecutive bullish bars, I mean a higher high, a higher low, and a higher close. As we can see over here in today's Reliance chart, a 5-minute chart, as you can see, we find two consecutive bullish bars. Okay, so as I said, higher high, higher low, and a higher close. All right. At the same time, what I want you guys to see, I want you to have a look at the corresponding volume bars for those two candles. So the volume bars also should be increasing, as in they should be bullish. So if you have a look at this candle over here, the 925 candle, the volume was 215.9K. Alright. Now on the next candle, which made a higher high, higher low, and a higher close, the volume is gone to 218. So hence we have a increase in volume also along with increase in price. So what I would do is that I would take the early, the earlier swing low. So what I would do, I would take a horizontal line and I would, since these two are the candles, the swing low would be here and mark this. Alright, so this becomes a support. Now next what I would do is that I would look for two consecutive bearish bars, as in lower low, lower high, and a lower close. Alright, so we had made our support with these two candles. Now let's go ahead, let's find two consecutive bearish bars. Here we find one. Alright, but look at it over here. This particular bar at 940 had a volume of 136, and the next bar, in spite of being a bearish bar, had a volume of 125. So this doesn't suit our requirements. So let's look at the next one. The next one also is a bearish bar. Lower low, yes. Lower close, yes. A lower high, fantastic. But look at the volume too. The volume is 136 for this bar at 950 as compared to the 945 bar of 125. So since we have an increased volume with a bearish bar, what we would do, we would take the immediate swing high and mark that as our resistance. So this becomes a support and resistance, our initial support and resistance for the day. Alright, and we would trade on basis of this. So what I generally do is that I'll wait for the price to either close below the support or close above the resistance. As you can see over here, price is close below the support over here, and what I do, as soon as the price closes here, I go short here with my stop loss at the recent swing high. As you can see today, this is Reliance. We shorted at 2105 and Reliance went all the way down what are the low she made today. She made a low of 2088. Alright, so I'm not going to tell you how to trail your stop loss. I'm not going to show you now how to put your target. That's for a different class, but today is just for you to draw the initial support and resistance for intraday. Let's take another script. HDFC. This is HDFC chart for the day, as you guys can see. Same technique. We look for two bullish and two bearish bars. So here you can see in HDFC the first and the second 5-minute bar, we have a lower low, a lower high and a lower close. So that is two consecutive bearish bars. But the volume do not correspond with the drop in price. So as you can see, the volume for the first 915 bar is 140. But in spite of the price coming down, the volume has not increased. The volume, in fact, went lower to 111. So that doesn't suit our requirements. So we'll continue waiting. Now here we have two consecutive bullish bars. So what do we do over here? We have a look. We have a higher high. We have a high low. We have a higher close. Fantastic. Now let's look at the corresponding candles. As you can see, the 935 candle, the volume was 40, and the 940 candle, the volume was 45. Hence, we have an increase in price with increase in volume. So what do? We take the immediate swing low and mark that as a support. Now, since we have a support, now we got to draw a resistance. Now, resistance would be two consecutive bearish bars. We have one over here and we have one over here. Lower low, lower high, lower close. And as you can see, the volume for the 955 bar is 15.4 and the volume for the 10 o'clock bar is 31.5. So we have a drop in price along with increase in volume. So that suits our requirement. We'll take the immediate swing high and mark that as our resistance. So here guys, we have our initial support and resistance for the day. So what do we need to do is that we need to wait for price again to either close below the support or close above the resistance. Here you can see at 11:15 price closed below the support. So what do? As soon as the price closes below the support, we will take a short position here with the latest swing high as a stop loss. So let's mark a stop loss to change the color to red, and this is it. All right, and we take a short position here. Sorry, this wouldn't be the stop loss. This would be the stop loss, yeah. And as you can see, we went short at 1793, and within the next half an hour or so, she reached a low of 1782. That's 10 points there itself. So guys, in this particular video, I just wanted to show you and share with you how I use the initial support and resistance for intraday trading. I hope you guys like the video. I would encourage you guys to try this out with other scripts too. This is not 100% foolproof technique. There are shortcomings and shortcomings with this too. But then again, you try to fiddle around a little bit, use your own indicators that you guys are already comfortable with, and see whether this works out for you. If you guys have any doubt, drop me a line, give me a shout, and we'll take it from there. Cheers. Have a great evening. Bye bye.